Bryant, it was a wild second quarter. With that in mind, what is your biggest takeaway?
It was indeed wild, and the biggest takeaway is the macro is still in charge. Investors had to deal with tariffs being on and then paused, dealing with the Fed policy. Is there going to be a cut? Is there not going to be? Immigration policy, and the macro drove the narrative for the entire quarter. That typically is reflected through style factor changes. In Q1, when there was fear, beta was the worst performing factor. In Q2, beta was the best performing factor. It was almost the only thing that mattered. So the macro is still in charge is the biggest takeaway for Q1.
Great. With all of that behind us, what are we watching for as we enter third quarter?
Well, Q3 is a transition. Do companies now transition to more of a microeconomic narrative? How are they going to talk to investors about the impact of tariffs? How are they going to deal with the potential slowdown from tariffs or the potential stimulation of the economy through the new reconciliation bill? And so how are investors going to interpret the comments from companies, and how are they going to lay out future guidance is what we're looking for in Q3? And does the market then transition back to stock selection from style factors?
Okay, as we enter into the second half of the year, what is one unintended but potential risk investors should be thinking about?
Well, right now, it seems like most investors think the Fed is going to cut rates. We're pricing in 2 cuts coming up in the back half of this year. And that probably is the base case assumption, assuming inflation stays stable and employment stays where it is. But there's a chance, a decent chance, that the new reconciliation bill proves very stimulative and GDP grows. There's a chance that through immigration policy and demand, unemployment levels go down, so labor is strong, and the Fed's in a situation where they have to raise interest rates. And I don't think anyone's looking for that. So it's not my base case, but investors should be more balanced in considering the Fed's next move isn't down, but maybe up in interest rates.
Great. Those are great insights. Thanks, Bryant.
It's a pleasure.